In 2022, businesses in the S&P 500 were expected to devote $561 billion to dividends, up from $511.2 billion in 2021. For the first time since the outbreak, several businesses started paying again. According to Howard Silverblatt, who is a senior index analyst at S&P Dow Jones Indices, it was observed that as corporations face pressure from investors to keep raising returns, dividend expenditure will reach another record in 2023. The balance accounts of corporations still show substantial liquidity, and a considerable retreat would be required for there to not be a record in 2023 at this moment. Businesses have acknowledged that they are less enthusiastic about the future of the American economy as a result of rising interest rates and persistently high inflation. But lowering or eliminating dividends is typically a last resort, as doing so sends a signal to investors that they are uneasy. Many businesses assert their confidence in their ability to pay dividends to shareholders because they believe they have enough cash flow to cover wages, capital expenditures, and other expenses. As a 1% excise tax is planned to go into force this year, other shareholder distributions, including buybacks, are anticipated to slightly fall from a total of around $963 billion in 2022. According to S&P Dow Jones Indices, S&P 500 businesses spent $210.8 billion on stock buybacks in the third quarter, a decrease of approximately 10% from the same period last year. American businesses often provide dividends to shareholders on a quarterly or annual basis, so executives must be aware of upcoming cash flows and allocate enough capital to fund these payments. When deciding whether or how much to pay in dividends, they typically assess their cash flow projections for the next at least 18 months. According to S&P Dow Jones Indices, 373 S&P 500 businesses increased their dividend payments in 2022 until December 15, compared to 2021. 4 S&P 500 businesses had their dividends cut, while 5 did so from 2022 through December 15. Some companies that raised dividends in 2022 were chipmaker Broadcom Inc., fast food powerhouse McDonald's, credit card company Visa Inc., and biopharmaceutical company AbbVie Inc. For instance, Broadcom announced in December that it would increase its quarterly dividend by 12% to $4.6 per share for the fiscal year ending in October 2023. According to a document, cash and cash equivalents were $12.4 billion as of October 30, 2022, an increase of 2% from the previous year. For the fiscal year that concluded on October 30, it distributed $7 billion in cash dividends, an increase of 13.2% from the corresponding time in the previous year. According to data sources S&P Global Market Intelligence, nearly 190 US-listed corporations stopped paying dividends in 2020 to conserve cash as the epidemic closed large portions of the economy. In the same year, 39 people went back to them, 53 people did the same in 2021, and about 30 have done so this year. S&P reported that 62 businesses, or 33%, have yet to resume paying their dividends, including major companies such as Walt Disney Company and Boeing Company. Another airline company, Southwest Airlines Co., announced its intention to restore quarterly payouts to shareholders after cancelling them in April 2020 when demand for air travel fell. The business will start paying the same dividend it did prior to the pandemic on January 31, making it the first major carrier to do so. The compensation works out to $428 million annually, prohibited airlines from making dividend payments or stock buybacks until the fall of 2022. According to a report, Southwest paid out $372 million in dividends and spent $2 billion on share buybacks in 2019. Other businesses are also reintroducing dividends, but at a lower level than before. The Hotel Investment Trust, Chatham Lodging Trust, plans to begin dividend payments on January 17 for the first time since March 2020. For at least the next 4 quarters, the West Palm Beach, Florida-based REIT will pay 7 cents per share on a quarterly basis, down from the 11 cents it paid each month before the suspension. However, economic uncertainty could affect executives' plans for dividends or share buybacks. When deciding how much to pay out in dividends, companies will consider earnings, their cash situation, and US economic indicators. According to R.I. Klein, Vice President of Stock Research at financial services company BMO Capital Markets. Investors are okay with Chatham Lodging Trust and other hotel REITs paying dividends at a pace that can be maintained and not reduced, allowing the companies more financial flexibility. Many investors believe it is the proper thing to do. However, Ashford Hospitality Trust Inc., a different hotel investor, is less likely to reinstate its common dividend after suspending it in 2020. Zurich Eubanks, CFO, stated that the firm does not have any immediate plans to reintroduce a common dividend. It does pay preferred dividends on a quarterly basis, which are fixed at a specific rate. According to him, the Dallas-based REIT has improved its liquidity recently. There was $505.5 million in cash and cash equivalents, down from $673 million a year earlier, according to reports. However, economic uncertainty could affect executives' plans for dividends or share buybacks. When deciding how much to pay out in dividends, companies will consider earnings, their cash situation, and US economy indicators.